So Spencer, over to you. Thanks, guys.
All right, how's it going, everyone? I'm Spencer Noon. I'm an investor for DTC Capital. We're based in South Florida. Excited to talk to you guys today about Bitcoin, altcoins, capital, and tokenomics. So before we start, why don't we go down the line here, and if everyone could give a quick intro, that'd be great.
Hey everyone, I'm Matt Shapiro. I'm a principal with Multicoin Capital. Multicoin is a thesis-driven investment fund focused on crypto assets. We focus very much on fundamental research and analysis. We approach the space like venture capitalists. I think at the end of the day, this is early stage tech investing. But because the underlying assets have liquidity, we can construct a highly concentrated portfolio of the assets we have the most conviction in, and can manage risk more effectively than a traditional VC because we have the ability to hedge and short assets as we see fit.
Hi, I'm Wesley Pryor. I'm a partner at Aenigma Capital. And we're a crypto hedge fund, and we're primarily a long-biased hedge fund. And we also focus deeply on fundamental valuation and due diligence in the crypto asset space.
Hi everyone, how are you? I'm Grace Lee. I'm still in a jet lag because I just arrived in America yesterday. So I'm from Fortuna, and we are doing the first blockchain platform for the global OTC derivative market. And our team members are all, half of them are graduated from the Yale University, and we want to do something that could solve the problems in the current OTC derivative market, such as lack of trust and the low operational efficiency and the liquidity problem through the blockchain technology. Thanks.
Hello, my name is Robert Riva, co-founder of Jefferson Capital. I have a more conventional finance background. I was at Morgan Stanley for 5 years. For those of you that know what a CFA is, I'll be finding out next week if I pass level 3. And I moved into the cryptocurrency blockchain space. I was an early adopter in 2013, and I just sort of saw the writing on the wall. Didn't really want to stick around in finance and tell my kids that I was there when everything was changing. So I bailed and started a company with my brother.
I'm the brother. My name is Michael Margaritov. I discovered Bitcoin when I was 15 in 2010, but at the time I didn't know enough about money to go ahead and buy any. I wish I had. And so fast forward, I finished university after 4 years studying in Shanghai. I came back home, and my brother and I decided to start the fund together. We have a proprietary thesis for investing in fundamental analysis, and we also have developed a quilt that separates cryptocurrencies, or we call them digital assets, into sectors based on their function, just to help clear up confusion about how those work.
Cool. So we're going to run through about 30 minutes or so in questions, and then, panelists, and then we're going to open it up for questions. So if you guys can think of anything, feel free, and we'll do it at the end. So the first question is going to be for Matt. Matt, how would you break down the ecosystem? Give us the lay of the land of crypto assets, cryptocurrencies, and blockchain?
Yeah, I mean, so, crypto is kind of an all-encompassing word. I think, there's like 2,000 cryptocurrencies today. So I think when you say cryptocurrency, you really kind of have to identify what you're talking about. So I think the best way to sort of break it down, the way that we sort of think about it is, what are the assets that are competing to be effectively money, future money, digital, programmable, self-sovereign money, versus sort of those that don't. So any asset that's really sort of going after the money use case kind of falls into 2 primary buckets. One of those is sort of the store of value thesis, which means that the actual currency doesn't really need to be super useful. It just has to have several categories that are crucially important. It has to be self-sovereign, it has to be decentralized, no one can take it away. It has to be scarce in nature, either deflationary, or it has to have a very known supply schedule. But that's kind of really it. It's more of a trust-based model. And that's mostly recognized today by the sort of the Bitcoin camp, and then various sort of privacy coins like a Zcash or a Monero. The other sort of bucket for money is the utility hypothesis, which is mostly known today for something like Ethereum, or the underlying native token of a smart contract platform. Those assets are competing on usability. The idea is that if you just get a billion people using this ecosystem and they need the underlying token to sort of engage in the ecosystem, and they're actually getting value and utility from that, they'll naturally just start holding more and using more because it's actually useful. And so something like that has the ability to build medium of exchange and store of value properties sort of at the same time. So those are really the two hypotheses that go into future money, and then everything else is sort of tokens that are built on Ethereum today are mostly incentive structures for the specific ecosystems that they're targeting. So the use cases for those, obviously vary by the platform that they're used for.
Does anyone else want to chime in?
Yeah, well, we've just noticed in our conversations with prospective investors that people tend to look in on the industry from the outside and think of it all as one big umbrella category. These are cryptocurrencies. And it just makes everyone a little uncomfortable to think, are you really trying to replace the dollar or the Turkish lira? And it's not like that. There are actual things that these currencies can do that normal money can't do. We're talking about something that can be programmed. You can have smart regulation, smart assetization.
Yeah, I think like the number one thing that you should do if you're relatively new to this space is get rid of the word cryptocurrency, dispose of it, throw it away, it's gone forever, and you replace it with something called a digital asset. And then you can start to frame a conversation where you're talking about digital assets as something that has its specific sectors, right? In the same way that the stock market has its, like, S&P 500 has the 8 dedicated sectors, right? Industrials, technology, et cetera. Cryptocurrencies, which we're going to throw away, digital assets have those exact same sectors. Each one of these actual tokens, these digital tokens, has a primary function. Its secondary de facto function is that, yes, it could also function as a currency in the same way that seashells could function as a currency, but that's not their primary, that's only the primary function of a few of them. There are others that have no real intent on being that. So that's key, I think, in order to be able to have a deeper, more relevant conversation.
Cool. And I would only add, a lot of people are doing a lot of great thought leadership just around the space in general. Multicoin, obviously, kind of thinking about that dichotomy of a store of value versus utility. But I don't necessarily think it has to be that. And so I think we'll see in practice when these things are actually being used, perhaps there's something that's like a hybrid, for example. And so I think, there's a lot of frameworks that investors like to think about when they're thinking about how a crypto asset will be used in the future. But the truth is no one really knows. So next question. The market right now, obviously, since Bitcoin's high of $20,000 in December is down about 80%, right? And so that's a lot. And I think at the same time, there's a lot of things happening that I'm personally excited about. And so I'd like to know from the panelists here, what's exciting to you about the ecosystem right now?
Well, the thing that's always been exciting to me about it, which remains the most exciting fact, is the kind of this creative door that's been opened up in commerce. So, for example, like we mentioned earlier on the last panel, I think it was Thomas who mentioned that we have businesses that have come out of the internet that exist only because the internet exists to support them, like social media. Well, the same is now true of blockchain in a spectacular way, where you can even have a competitor to Facebook that Facebook users themselves can now be in complete control of their own advertising space. So imagine if you wanted to be paid to have an advertisement for a local business. You could even choose which businesses you wanted to support. You could choose to support your cousin's artwork. There's a whole new dimension of business startups that can be created on a blockchain that consumers would be, I would imagine, extremely excited to choose over Facebook. And that's just social media. I mean, other incentive structures in every industry exist and are waiting to be discovered.
Yeah, mine personally is the digitization of real world, and more specifically, income producing real world assets. So think of a commercial real estate building, right? These buildings have prohibitive costs for people, the average retail investor that can't necessarily participate in ownership of that building. Now, if you were able to fractionalize the value of that building through the issuance of a digital token, you now open up a market breadth that you didn't have before. You allow the retail investor to be able to participate in the earnings that building generates, right, proportionate to how much he owns of that digital token. It's all obviously legally structured through smart contracts, et cetera. And more specifically, the reason I say income producing as opposed to art, which we could have a theoretical conversation, also does have a use, but specifically income producing because using their proportion of income, of an income claim to an asset, we have existing multiples and value structures that exist that we know how to then derive an actual value for the token based on its income. Some sort of multiple, you can use comps. And ultimately, the amount of, you could really develop an efficient market portfolio. If you wanted to go market neutral on Miami real estate, Miami commercial real estate, you could go long South Beach commercial real estate, office space, and short Brickell. And you literally through the specific digitization of these commercial properties. So I think that opens up an entire, and restaurants, fast casual, things with prohibitive high unit costs. I think you're going to start seeing massive use of the digitization of those real world assets.
Does anyone else want to chime in?
I mean, I'm excited about just the concept of sort of community-owned networks. I'm a big believer personally in sort of transparency and alignment of interests and economic incentives. I think that is one of the most powerful things that we have today that is actually within our control. So the convergence of a user and an owner and the value creation that can occur because of the alignment of incentives there, I think is very powerful.
Cool. Let's talk about Bitcoin. Today, Bitcoin is the most valuable asset in the space. And the question I have, let's direct this one at Wesley. Do you think it's going to be that way forever?
I think it's going to be that way for the foreseeable future. If we look at Bitcoin today, Bitcoin has had, to really understand Bitcoin or cryptocurrency in general, you need to understand what the underlying process is and mechanics for actually generating that currency, what actually goes into it. And in that case, with Bitcoin, it's value in the form of energy that you'll never get back. So if we look at the Bitcoin network and we think, how much value is there? Well, that's something that we can quantify. And we can see that Bitcoin has more value than any other cryptocurrency in the entire market space right now. And that's not something that's going to be easily overcome in the near future.
Yeah, I can add a little bit to that. I think when you think about all of the different crypto assets out there, and I think there's 2,000 or something, and that number is growing by the day, many of them, when you think about it, are actually doing things that Bitcoin doesn't perhaps do. And so their kind of angle is, we're going to do this better than Bitcoin. But in a lot of ways, the design of Bitcoin itself is extremely conservative. And so there's not a lot of attack surface for things to go wrong. And so when you think about an investment and having to worry about something like a technology team that's going to always be improving new features and doing things like that, the Bitcoin team and the core team that's an open source community that's working on it, they are not trying to innovate very, very quickly. They're trying to just preserve what they already have. And so when I think about risk-adjusted bets in this space, I think Bitcoin is a fantastic one for precisely that reason.
Yeah, I agree. I think as an investor in this space, you sort of need to think probabilistically, right? Investing at the end of the day is risk management. And so, Bitcoin certainly has the lead in a lot of different areas, but there's a lot of different areas that it could split up. And so on a probabilistic basis, like there are different versions of the world that have non-zero probabilities that something beats Bitcoin. So I think the question is, as an investor, is, what do I really want to get exposure to, and how do I do this on a risk-adjusted basis to get the best returns?
I think a hugely understated fact when it comes to Bitcoin is the fact that this first mover advantage is exponential. Like the fact that this community of Bitcoin Core, for example, exists already means that anytime anything in the space evolves ahead of Bitcoin, Bitcoin is a matter of weeks away from adopting it if they want to. Like all it takes is a submission to the Bitcoin Core team and for them to look at it and go, yeah, maybe we need that. And then boom, it hard forks in. Like Bitcoin already has smart contracts. That wasn't there 8 months ago. So, yeah.
Cool. So, next question, and this one's going to be directed towards Grace. In the last panel, I think we had a prediction that 2,000 altcoins right now, the number would be down to maybe 30 or 40. So, do you agree with that consolidation thesis, or do you think perhaps there will be magnitudes more? I'm curious at your thoughts there.
Okay, I gotta talk about something in China. It's like lots of projects in China. They are sold lots of ETH recently because they want to survive. So it's definitely a very winter and very cold atmosphere for the projects to survive at current situation. And also for me, our assumption is during this time period, there will be lots of projects will be crushed down. And also what's more is some technology-oriented project or the business application-oriented project will face a lot of problems because the room for them to have a try will be squeezed. But as for Fortuna, we are very focused on just 2 points. The first one is derivatives. The second one is making profits. So Fortuna, as we all know, is the first blockchain platform for the global OTC derivative market. So why we choose derivatives? Because the OTC derivative market is very huge. The notional exchange of the OTC derivative market in the 2017 is already $524.5 trillion. And also the future, we can see it geographically. The futures in the Asia already surpassed the North American market. Also the options market in China from 2016 to 2017 already grew up 10 times. But there's just one option market in China called Shanghai 15 Index option. So China will definitely be a very potential market. So we choose the derivative as our main goal. And the second is as an Alcon, we also launched our Alcon called FOTA. And FOTA have many usage in our platform. First, it could make the market and platform the liquidity more faster, and because the FOTA could transcend the barriers like physical location and some currency problems. Because I previously was an international relation researcher, so I know how important you should use the crypto token like FOTA in our platform to make the transaction. And the second, it could digitalize the supervision because in our platform, the FOTA will be supervised 24/7 without any human intervention. So what's more is FOTA, we use FOTA to build an ecosystem in our platform. We have several rules like arbitrator, quoter, contract template maker, trader, delegator, and so on. So we use FOTA as a rewards and also the punishment to all the play role in our platform. And so I think the Alcon have its own functions to do in different kind of application and different kind of platform to use the blockchain to make the application more functional.
Yeah, I would take this question in 2 parts. I think one, there can be as many digitized or as many tokens as there are corporations in the world in the form of decentralized autonomous corporations, whether you're decentralizing the governance function and how a board of directors are elected by token holders or what have you. But then on the other side, we're going to see kind of the commoditization of some of the products that some of the cryptocurrencies can provide, and we've seen kind of an oversaturation of cryptocurrencies that want to sell security like Bitcoin does. We're going to see emergers or leaders that are going to emerge and really commoditize those offerings. Things like we've got a Monero hat up here in the front. Monero offers security and privacy. We're going to see other commodities offered, such as we'll see storage, Ethereum for decentralized computation, things like this. And I think that instead of everyone deciding that they're going to build the next and best thing, they'll start to port certain functions that they need from other cryptocurrencies or crypto assets, if you will.
Yeah, and just to wrap it up, I think I would take the over on 2,000 tokens in whatever amount of years. I'd go in the order of magnitude of millions, to be completely honest. And the reason is because, two actually, if you have a system that doesn't require any trust, the only way in which those systems can interoperate with each other, right, is they need value. And so they need to have a token. Otherwise, we have a database and that can be compromised. And so they don't have to all be billions and millions of dollars, right? They could be hundreds of dollars. But you need that token in order to interoperate with other pieces of tokens or other token systems in order to function. And the other thing I think is you talk about stuff like security tokens, which we'll get to in a second, but really anything. Think about a video game. You're playing a video game, it's backed immutably by a blockchain. Every little piece in that video game could potentially be represented by a unique token. And so when you think about, I don't know, imagine any video game that you've ever played, there could be millions of unique tokens just in that game itself. So I think it really requires us to take a step back and think about how this could consume just technology in general. And so for that reason, I think we should have a lot. So I talked a little bit about security tokens, but Matt, I think maybe it would be good for you to just give a quick primer on what that is and why it's important.
Yeah, so I think Robert did a great job of outlining sort of all the benefits of security tokens. I think the concept behind security tokens is that you could just, in a much more efficient way and in a trustless way, you can sort of automatically sort of distribute and sort of tokenize value and distribute it to people who need it. And so historically, like large assets or assets that require a significant amount of capital, have sort of a limited buyer universe by nature. And so the ability to sort of tokenize that, break it into a bunch of pieces, and distribute it to, like retail investors like that, is very powerful. The fact that we have, today our equities, trade and settle in like I'll date myself, T+3, I guess now it's like T+2, is pretty crazy to me when, you could literally do the same thing in Bitcoin in, a 10-minute block or Ethereum in literally a minute. With enough confirmation. And so, it makes sense to me that sort of low-hanging fruit and one of the great use cases for blockchain is sort of security tokens and issuing them. I think what's challenging about them in the short term is like, you could tokenize this hotel and it's a great, use case, and a lot of people will probably want to own part of this hotel, but it doesn't fundamentally change the valuation of this hotel. I mean, maybe you pick up a illiquidity discount, but at the end of the day, like, this is a traditional asset, right? It has a net operating income, it has a cap rate, it has square footage, you can figure that what that is. What's interesting though is sort of the future world that Robert outlined, where once you hit critical mass, you could start rebundling, repackaging a lot of these individual assets into new securities that don't exist today. The ability for blockchain and tokens to enable that behavior is just very, very interesting and very compelling going forward.
Cool. So we've just covered a lot. And I know we have various members of the investment community here. I think it would be helpful for everyone on the panel to answer this question, which is, you can enter this industry and make it investable in so many different ways. But what's in your opinion the best way to get exposure to blockchain? And how would you do it?
Well, I would get exposure through Aenigma Capital hedge fund. But I mean, I think the starting point is really to spend the time and take the time to learn about what you're investing in, and learn from great thought leaders in the space like Andreas Antonopoulos, who can break things down into a digestible format and just really start to wrap your head around what the technology is, and what are the core features and how is it used, and once you have that understanding, you want to speak to other experts and get their opinion on what's the best time to get that exposure. But understanding the asset class that you're deploying capital into, from my perspective, is the starting point.
Yeah, I think that this space is just remarkably nascent, and as such, it's quite inefficient. And so, I think investing in this space today, and for the foreseeable future, really lends itself to active management. And so I think you really have to figure out where you want exposure. If your bread and butter is sort of understanding picks and shovels equity, like, there's a lot of value to be made there. The way that we think about it at Multicoin, our core competency is understanding the tech, and understanding where value will accrue in the system. I think that's a big open item in the space generally, is just because you have an asset or a protocol that millions and billions of people use, or trillions of dollars of value flow through it, it doesn't necessarily always mean that that value will accrue to the token. And so for us, figuring out where in these protocols protocol's value is going to accrue and investing in that. That's sort of our edge and how we generate alpha. And that's sort of where we focus. And I think that, if you're going, I think there's a lot of value to be created in that space. And if you want to get exposure to it, you sort of really have to dig deep and understand the fundamentals.
Yes, for me, it's like the exposure to some blockchain application thing. You should define it, whether if it could make profit or not. It's like why the Fortuna choose the derivative, because it's like in the same logic, it could do exposure to some underlying assets which are not tradable, and the total market is super huge. So in the same logic, if you want to invest a blockchain project, the first thing is if this kind of blockchain technology could be used in the specific application platform, and is it application phenomenon is could make profit or not? Is it very important?
Yeah, so I think that, well, first and foremost, I would look at this as an alternative investment, right? I would, as for modern portfolio theory, right, I would say you've got your stocks, your bonds, and then alternatives. And within that alternative basket, I'd say that this has about a 10 to 30% allocation within alternatives. So if you typically allocate 10 to 15%, I'd say this has a 1 to 3% allocation. Who you choose, whomever you choose to have managed that, and you could choose to go passively. There are a couple of sort of indexes that are out there in the form of security tokens. We're actually developing one based on, my brother touched on it earlier, a quilt that separates the entire asset class into different sectors so that you can actually have true diversification across the board for different use cases, as opposed to just holding the top 20 by market cap, which I don't think actually has an effect, any sort of diversification effect whatsoever. But in terms of active management, I think going at it alone is akin to doing, how did that work out in the 90s for people on the internet? The key is to entrust someone that is asking the right questions, and by asking the right questions, it means they have to understand the technology well enough to be able to see what obstacles are on the horizon, right? What potential solutions are there for said obstacles, and thus, who's out there doing that, and where are they, and what's the potential? And so it's just key to be able to have someone that understands technology well enough to ask those questions and do it on your behalf. Because otherwise you're just sort of shooting darts, and we all have biases: confirmation bias, conservatism bias. Conservatism is the tendency for us to react to new information very slowly, and obviously confirmation bias perpetuates that, because then we're just looking for information that already coincides with our preconceived notions. So if it's not your area of expertise, I would certainly find someone whose area of expertise it is, and go about it that way. Anything to add?
Cool. I just received the key that we have 5 minutes left. So what I wanted to do is open it up to questions. We probably have time for 1 or 2 questions. Anyone? Yeah.
With EOS and these other ones that raise a ton of money, would you rather find an investment that gets a ton of money and backs into it, or starts from grassroots and goes up?
Yeah, so the question was, you have some projects, EOS is one of them, they raised something like $4 billion. So do you have a preference with, going into a project that already has that massive balance sheet, or doing something that's perhaps more organic and community grown in order to create value? Does anyone want to take that?
I think obviously it's preferable to find a small coin that then goes on to become very, very, very valuable, because then you'd be very wealthy. But I don't think anyone has that power. And it's not like you can just psychically guess which one's going to do it, because there are so many competing in each sector even. So I think, given the fact that the market is still so nascent and things tend to move in the same direction up or down, you don't really have a lot to lose by buying into the wealthy ones. It seems like a good hedge if there is such a thing in this market. But you really should be looking for the ones that are not yet known. And they are out there, and there will be many more that go on to become.
I think that look, in a vacuum, like obviously having more capital is better than having less capital. So under the assumption that you could deploy it properly, I think that truly could be a competitive advantage. But I think that, this is a different industry in that these protocols, they don't have sort of owners. So just because a project has $5 billion of capital on their balance sheet, it doesn't necessarily mean that any of that value will accrue to the token. And so I think in a vacuum, like more capital is better than less from a competitive standpoint, but what's really important is understanding sort of what the dynamics are within that protocol, how it attracts users and how it accrues value, and more importantly, like where that value accrues. Because having $5 billion on the balance sheet doesn't help if you're buying a token where none of the value is designed to actually accrue there.
Cool. Another question?
I just would like to know what you guys think about indexing, if that's something the customers are asking for, if it's something you'd like to promote, and if so, on what basis, and how it should be done.
So just going to repeat the question just so everyone can hear. The question is about indexing, and what are your thoughts on that?
Yeah, so obviously, the ETFs submitted by the Winklevosses got shut down, and so it's very difficult for conventional indexing to exist because there's no option for anyone to be able to get exposure through, the traditional exchanges. So the question then becomes, if you're capable enough to figure out how to buy an ERC20 and transfer it to someone who's issuing a security token that looks, acts, and feels exactly like an ETF would, your question is basically like, is it worth it? And I think everyone is now, like in the conventional marketplace, is moving toward indexing, right? Like you've heard it, 90% of asset managers can't outperform their index. Anyone that says that they're better than just buying the SPY typically isn't over a long enough sample size. So the argument can be made both ways, right? You could say, look, cheaper exposure to a diversified basket, I think has tremendous long-term value. But because of the nascency of the space, like there are coins that are in the top 50, 40, 30 market cap that like could just be outright scams. Like that exists. And so if you have an index that's passively allocated to that, like you're gonna get hurt when that thing drops. So that's why, that's why our index, which we're planning on launching in November, which we're happy to talk to people about, is one that's going to be having an exposure to multiple coins across the board, 60 plus, as opposed to the ones that exist right now, which is 10 and 20. Other than that, I don't know of indexes that do exist. So, I think we're covering both, right? If you want the active management, you can have it with us. If you want the index, we totally understand. 45 basis points, go for it.
I think passive management works, but I think it also works and is very subject to the maturity of the industry within it's in. Like obviously passive management for the S&P 500 makes sense because those companies are mature and relatively stable. I think for a nascent asset class like this, I think Robert touched on it, like there's 10 assets in the whole 10 index or some of these passive indexes. We wouldn't touch 6 of them at all, and we're short 3 of them today. Because we don't fundamentally believe that they make sense or they're designed to accrue value. And so I think that as the sort of industry grows up and continues to evolve, the better assets, the cream will rise to the top, and then you sort of get more power in different indexing. I think for now, I really do think that active management in an efficient market makes sense.
Cool. All right, guys. Thanks so much. That was fun.